The cryptocurrency market is showing renewed strength after weeks of volatility sparked by global geopolitical tensions. The ongoing conflict between Iran and Israel has had a complicated impact on digital assets. While the initial outbreak of violence caused a brief wave of risk-off selling, the recent announcement of a fragile ceasefire has triggered a rally across the crypto space. Bitcoin in particular has responded positively to easing tensions and a weakening US dollar, climbing to approximately $107,000 with a gain of about 2.7% in the past 24 hours. Bitcoin's price movement is increasingly being viewed through the lens of macroeconomics and institutional adoption. As the dollar weakens and investors anticipate a more dovish stance from the Federal Reserve later this year, Bitcoin is starting to reclaim its narrative as a hedge against both inflation and geopolitical instability. Recent ETF inflows and continued corporate accumulation are further supporting BTC's upward momentum. Analysts expect it to fluctuate between $94,000 and $114,000 over the coming weeks, with a potential breakout above $120,000 if current conditions persist. Ethereum is closely mirroring Bitcoin's recovery, currently trading around $2,415. While it's slightly down on the day, it has held on to solid weekly gains. Its performance is being bolstered by increased activity in decentralized finance, DeFi, optimism around Ethereum, ETF approvals, and growth in Layer 2 ecosystems. Ethereum continues to position itself as a long-term infrastructure asset within the crypto economy. Analysts predict that Ethereum will trade in the $2,200 to $2,600 range in the short term, while long-term demand is expected to be driven by staking yields and its role in supporting decentralized applications. Meanwhile, Arbitrum, ARB, a prominent Ethereum Layer 2 scaling solution, is trading around 31 cents. The coin has experienced modest fluctuations, with forecasts for the end of June ranging from a conservative 24 cents to a slightly more optimistic 33 cents. Long-term projections for ARB vary widely. Botsfolio estimates that it could reach between $1.03 and $2.01 by the end of 2025, while other sources like CoinLore see a potential climb to $5.50 or more by 2030 if Ethereum scaling remains a key priority. Arbitrum's future largely hinges on the success of the Ethereum ecosystem, especially if Ethereum fails to scale natively and relies more heavily on Layer 2 technologies. Globally, the situation remains fragile. While the Iran-Israel ceasefire has helped lift market sentiment, there are still concerns about a possible resurgence of violence. In addition to direct conflict, cyberattacks are also playing a role in shaping crypto sentiment. Iran's largest exchange, NoByTex, was recently hit by a major hack that resulted in over $90 million being stolen, allegedly by pro-Israeli hackers. This event has highlighted the increasing intersection between digital assets and geopolitical warfare, further cementing crypto's relevance on the world stage. Looking ahead, the market's direction will be influenced by several key factors. Any deterioration in the Iran-Israel situation could reverse recent gains. Regulatory pressure from the US and Europe is also intensifying, with new rules targeting crypto ATMs and exchanges expected to limit access and increase compliance costs. At the same time, central bank policy, particularly from the Federal Reserve, will play a critical role. If interest rates are cut in response to global instability or economic slowdown, risk assets like crypto could benefit significantly. In conclusion, the crypto market is demonstrating remarkable resilience in the face of global uncertainty. Bitcoin is reasserting itself as a macro-sensitive asset, Ethereum remains vital to the DeFi and application layer of crypto, and Arbitrum continues to attract attention as Ethereum's scaling solution. While short-term volatility remains likely, the long-term outlook for digital assets remains bullish, backed by structural demand, increasing institutional exposure, and the growing global relevance of blockchain technology.